All right, let me just test my mic. Can you hear me okay on your end on the mic? I want to make sure the mic is working. Testing the mic. All right, well, welcome everybody to Stock Analysis Friday. Today is May 20th. My name is Bennett McDowell with TradersCoach.com. Great to have everybody here. And let me just go over a few quick things before we jump into the charts. And also to let you know, go ahead when you can to start typing in the symbols, the stock symbols or ETF symbols you would like me to look up today. And if you could type those in caps, that would be great because it's easier for me to see it that way. All right, so let's go through some of the administrational items. And I have to start out, of course, with our presentation disclaimer, which explains the risks involved in trading. You know, we work in a realm of probabilities whenever we actually enter or exit the market. And it is possible to lose some or all of your money trading the financial markets or even investing in the market. So you got to be careful about that. Make sure you are investing or trading with money you can afford to risk, called risk capital. Know how to do risk control. And of course, if you have a financial advisor or money manager, please discuss with them any of the trades that we talk about here or concepts we talk about here to see if they're suitable for you, because we don't know your personal situation, and of course they do. If you'd like to learn more about risk control, you've come to the right place as well, because I have a great new book called The Money Management for Traders on the far right-hand side. And notice I have a white book on the far left-hand side called The Trader's Money Management System. The difference between those two books is the book on the left side is a comprehensive, fairly detailed book on money management. However, the book on your right is a newer book, just came out, very affordable. It's kind of a Cliff Notes book on money management. So it gives you everything you need in there in a very easy to find, quick format. So this is something, if you're, kind of grasping it, how do I do risk control? What do I do with that? That's the book for you, because it's an easy read. There's formulas in there. And by the time you're done with the book, you can go ahead and start using money management and risk control in your trading. It will make a huge difference. A lot of this business is having the right trading software tools, and we have those as well. But also, too, you have to, part of those tools is money management and risk control. So that is a vital part of doing well in this business. And then I have other books delving into other various forms of technical analysis. And here's our tools, lo and behold, right? All right, so let me just walk you through these real quick. You can go to our website at traderscoach.com and go under software to see more about our trading tools. But these tools on the upper right-hand side, you're going to see me using these today. This is the ART software, draws pyramids and entries and exits on our charts, confirmed by the OWL momentum indicator, also used for Elliott wave counts, the PTF indicator that tells us with 75% probability of whether markets will make higher highs or higher lows at certain times. Trendline Master automatically draws trend lines on charts. And the ERI indicator, which actually looks at the fear and greed in the markets. Then we have a second row of software tools called our scanners. All right, we have the multiple time frame scanner, brand new software coming out next month. Then we have the trade confirmer software, turbo scanner, and Elliott wave scanner. This is how we find markets to trade. And then finally at the bottom is the important risk control software. We have the Trader's Assistant software, which is not only a record keeping, but it also is a system that analyzes your trades for you, gives you various variables like average win, average number of days in a trade, profit percentage, win to loss ratios, and all that kind of good stuff. Risk control software here called the risk reward calculator does trade size and risk to reward on each and every trade. And then the trade size calculator way over here in the far right calculates just trade size. All right, so that's our software tools. I always say if you don't have the right tools in the market, pretty hard to do well in this business. All right, now the other thing we want you to do is like, subscribe, and share, okay? The more people that we have coming to this event, the more that we can uncover trades that we can all share. All right, so definitely bring your trades. I'm going to look at each of them on a multiple time frame analysis, and we're going to try to find some ones that actually stand out and are the best trades for us each and every week. So the more people we have coming here, the better. All right, so, and type your symbols in caps for sure. And heck, bring your friends. Like I said, the more the better. All right, let me jump out of here. Before I get going, there's a couple markets I want to take a quick look at. You guys take your time, type in symbols at this time. All right, first thing is I want to look at the Dow Jones Industrial Average, and I want to use it on multiple time frames. So multiple time frame analysis, let me just explain my layout real quick. All right, on the far left-hand side, I have a 60-minute chart. This kind of gives me a glimpse of the short-term trend or momentum on a market I look at. Now, all three charts are of the same market, the same symbol. And I happen to be looking at the Dow Jones Industrial Average Index here. All right, the next chart to the right is the daily chart, gives me a look at the intermediate trend. And then the chart on the far right is the weekly chart, which is the long-term trend. Now, all these indicators you see down here are all our software tools. Here's the pyramids that I was talking about from the ART software. So I have the OWL here, and this is measuring momentum and Elliott wave. And notice that you see it on all the different time frames, because we like to know what the momentum is and so forth on the different time frames because they vary. Then we have the PTF indicator here. And basically, like it is here where it's red, it's indicating a 75% chance that the market's going lower, and I'll show you how low in just a minute. When it's yellow, it's neutral. But when it's green, it's bullish. Then I have the trend line under here, all right? And then I have the emotional reader index, which is measuring greed and fear over in that aspect. All right, so here's what I want to share first on the Dow. I want to bring up the weekly chart and go back to about 2008 when this move that we've kind of experienced has been in a bullish uptrend. So we've been in a move to the upside for a long time. Now, we all know that trees don't always grow to the sky forever, right? They grow, the storm comes, topples them over. Very similar to the markets. We're at a very interesting area in the markets right now where we're topping. And tops are very hard to precisely define. But what we do is try to connect enough dots using our tools to get a probability on whether that is a top or not. Nothing's a certainty. It's a probability when we deal in the markets. So the first thing I like to do, all right, is if I think a top is in the market, and it certainly is indicating like it might be, first thing I like to do after that is figure out where is it going? What's the target? All right, so it's coming down right now. So if it comes down further and takes out some more key levels of support, then that's a major bearish market we're in. And so we have to kind of have an idea of where that's going, right? So I use Fibonacci retracements, and I go back to the beginning of this move all the way up to here. And it puts a target zone in this area here of where the market could possibly go. So that's going to be around 25,364 down to 18,155. Now, this is the COVID low. Do you remember that? How can you forget that, right? Back in 2020. So what's interesting with this is notice the PTF is red. Now, on the PTF indicator alone, you find the lowest low in that red area. And so far, that is the COVID low. So there's a 75% chance we're going to go below that COVID low, which would put it into the lower area of the target zone. So if we are in a major bear market on the Dow, we expect it to get into the teens. That's huge. Okay, that's a big sell-off. Now, if you notice here on the long-term chart, and I'm going to magnify it a little bit so you can see current prices better. Notice our system has generated back in February to March a short trade based off the pyramid on this price bar. And we come down and we take a look if we have confirmation on the indicators below. And we do. Red, red. Those are the two main ones I'm keying off of. So we initiated a short trade there and recommended that as well. Our target is this area down here. Now, can I definitively tell you we're going to make a profit on this? No, because we don't know until you actually close the position, because maybe we'll get a rebound and make one more high. Is that possible? Sure. That's an alternate, what they call an alternate Elliott wave count. If this count is correct, then that would be a 3 here, and we're on our way down to a 4. And then after 4, you get 5. But this is a weekly chart, so it's going to take quite a while to get down there. But we certainly may have begun. We've taken out some key levels of support here, here, and there is actually one more that will pretty much put the nail in the coffin, and that's this one down here. I'm on the daily chart now. So that's this one here. I'm waiting for it to really hit. And then I may initiate some other short trades at that point. But based on the tools, there's no reason not to be short. The probabilities, not the certainties, but the probabilities are in our favor. So that's kind of what we're looking at. So we got a little further down to go here, and we'll keep an eye on it. All right, so the momentum is still bearish, even though, you know, we started out okay. Now we're down 254 right now. So definitely, it looks like we're seeing some more selling. We'll see how much follow through there is. All right, so I just wanted to cover that real quick before delving into stocks and markets you wanted to take a look at. All right, let's get going. All right, Kevin, how are you doing? All right, Kevin wants to look at McDonald's. My son would be happy with that, Kevin. He goes there all the time. Nice and healthy. All right, so here's McDonald's. Mickey D's. All right, so I don't know whether you are short. Okay, great. No reason not to be short. All right, good job. All right, so let's take a look at the various time frames. First thing that jumps out at me is on the weekly, we got a red PTF. On the daily, we got a red one, and on the 60-minute. So you don't want to be long. Second thing is we have red over here. We have a red owl here and a red one here. Beautiful trade, okay? So this is a nice trade to the short side. I don't know when exactly you got in, but we had a pyramid entry back up in here, right? All right, so for normal position trading, you'd use this daily chart as your primary. If you're a longer term, you'd use this weekly. But we take a look at all three to get confirmation or sync between them. So the next thing we got to think about here is where is this going? All right, that's the next thing. Now, if you hit it right, and this is going to be a long-term bear, you're probably just going to want to hold this position as long as you can, because chances are we're going to go way, way, way down here, because there's your PTF, and this is a weekly chart that's going to probably resemble the Dow very much. So we got a pretty significant low coming up if it is a major bearish market. Now, if you're going to manage it on the daily chart, you've got a pyramid stop here. Okay, and you've got red and red. So this would be your first target here. So again, it depends on your intentions. Are your intentions to make it all the way and hold this position for possibly a year based on the weekly chart? Or are you holding this position as maybe something for a few weeks or a month? So if it's a position trade based on the daily, I would, here's your first target right here. Okay, at the PTF bottom right there. So around what is that, 220 or so, a little bit lower. So I would probably scale out a half a position here if you're trading here. And then you should be getting more pyramids and you can move your stops down at that point. So that's how I would kind of play that. If you use the 60-minute chart to get in, well, then your stop is going to be on this pyramid here. Okay, but you have red and red across the board. So don't be too quick to get out now. Wait. All right. You could even scale out a third if the PTF on the lower time frame turns yellow before the one on the daily, and that usually happens. All right. So it depends on how you want to manage the trade. I have a whole course on managing the trade, but that just gives you an example of how you can manage it depending on whether you're trading this on the 60, the daily, or the weekly time frames. Long-term, short-term, intermediate. All right, Kevin, I like that one. I like that one for everybody, actually. Risk to reward's not quite there for a new trade, because if you get in here and your initial profit may be there and your stop is here, you don't have much more room to go. So risk reward's not that great. For a longer term trade, it is fantastic. Okay. In other words, if you're going to hold it down here and your stop's way at the top here and you're here, there's your 2 to 1. Okay, so I'm going to put down McDonald's as a possibility for a long-term short. How's that? Okay, so let's keep an eye on that, because, you know, we always try to find a couple good ones by the end of the day, and that could certainly be one. All right, let's move on here. All right, so Kevin, thank you. All right, Grayson, White Line, how are you? All right, boy, you got a lot of them. GPC, you're going to keep me busy here, Grayson. Love it. All right, GPC, let's see what we got going on here. You're looking at all of these for possible shorts. Okay, so right now, what jumps out at me is this green PTF. I can't short with this thing going green. Now, if it abruptly turns to red, different story. Okay, so in this case here, give it a little more time. Let's see if things roll over. You've got a bearish pyramid forming on the weekly chart. So if prices go a little bit lower, that's going to be a red colored bearish entry. And, you know, then you can draw your fibs on this. But I wouldn't take it until we get this thing out of the way. This has got to be either yellow or turn red before a short trade. So don't do anything with that yet. Okay. And then, of course, look at the owls on the daily chart as well. You don't want to go short with a bullish owl showing bullish momentum still there. Okay. TAP, let's take a look at this one. All right. So this one, here's an example where that PTF turned red. So it does that about 25% of the time because it has a 75% accuracy. So when it actually goes from green to red, it didn't work. Okay, so that's, you got to take note when that happens. So now it opens it up for short trades. And you've got a signal here, but you still have a bullish owl here. So not quite ready yet. Also, too, let's just be careful here, because we want to see kind of where we're at on this one. You got to be careful not to be going short in what might be a longer term uptrend here. So let's just kind of finagle this. You reach this, so that's a good sign. You're going against a bullish owl here. So right away, if you go short at this level, you got to go with a half a trade size. Possible ABC for a wave 4. All right. Here's the other alternate count. This could be a 3, A, B, C, and that type of thing. Or this retraced an awful lot, too much to be a wave 4. But if this was a 1 and this was a 2, then you'll have a 1, 2, 3. So you got to be careful here. You're not going to know that until you exceed a normal fib retracement. So if you take a short, just have your stop in place in case one of the other alternate wave counts disrupts your trade and you get out with your a loss here. But I wouldn't go in now. I would wait for this thing to turn a little more bearish on the owl on the daily chart, and then do half a trade size that you would normally, because you're going against a bullish owl on the weekly chart. All right, good. All right, Ultra, ULTA. All right, so this one looks a little better for a short trade, simply because, as soon as you look at it, what pops out at you? Red, 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 and red. Pyramid, pyramid. Okay, so next question is, you got a nice target down here. And this is very similar to kind of the other trade I was going over with Kevin on McDonald's, is that, the trade would have been nice just at the bottom of this pyramid here, because you would have had a red owl then as well. It's calling for a short term. We're almost there, okay, because this is the lowest price in that red area. So the PTF's really not giving you a target zone at this point that you could use on the daily chart. It is, however, giving you a good one on the weekly chart. So I would say this would probably be a pretty good short. I'm going to draw in a fib retracement on here for a worst case scenario. Let's say this is a correction in an ongoing uptrend. Then this is your corrective point right here. So you kind of got to watch it. So I would say, unfortunately, if you were considering a short trade at this time, you would have to be confident that it was going to hit the target zone on the weekly chart, because we are already at the target zone on the daily chart. And you can see on the 60-minute chart, it's pretty extended. So we'll probably get a rebound, and then we'll probably get one more low, putting it into the target zone. And then at that point, we're going to have to see if it continues down. And if so, then it's in a longer term bear correction. So my synopsis on this is that if you wanted to be a little chancy and take a short trade here, I would make it a long-term trade that you want to be in for about a year, and base the probabilities on trying to get here. Don't have your stop close, put it at the very top, do your trade size, and there's your 2-to-1 to the target zone. Otherwise, I'd pass on the trade. All right, so that's Ultra. ACM, let's take a look at ACM. All right, ACM for a short trade, probably not quite yet, okay? You had a chance earlier, I think, here. And nope, couldn't have taken it there. You could take it here. I would say this is looking pretty good, all right, for a short trade. I actually like this. Let's put ACM. Now, what I normally do is, before I initiate a short trade, I look to see where the owl is. So if I'm not in it already, okay, I would look to see, just to make sure this continues to roll down. But you did have an entry here with an owl. PTF's neutral, that's okay. This entry here would have come on a red owl. So I would say, a short position here is okay. All right, generally speaking. If you want to be a little bit less chancy, wait for this to turn red. But I would say this is a good one for a short trade. Now, the next thing is, where is it going? Where is the target on this one? That's the next question. So on this one here, we don't have any PTFs helping us, right? So let's say we have a normal retracement on this, and I'm just going to bring this up here. Okay, so probably we're looking at around $58 for a target. So you need to do the risk control and see if that works, because your stop would probably be here at this point, and we're trying just to get here. So risk to reward is not so great on this one. But if you get to the lower part of the channel, the risk to reward would be okay. So on one of these type of things, a little more risky. It would have been better to get maybe in a little earlier, but at this particular point, you could take that and then your target make around 51 bucks, okay, which would be the center of this target zone. So don't take profits if you can help it too soon. All right, so that is ACM. All right, ALL, let's take a look at that one. All right, here is ALL. All right, so we got a red PTF and a bullish pyramid and a bullish owl. So right away, that's not syncing up. This is okay. This is kind of extended. Not my favorite. Okay, I would not do anything with this right now. All right, that's ALL. All right, BXP. Give that a second till it's still loading. Okay, here's BXP. All right, similar situation. All right, it's, you know, just take it. No longer has a bullish pyramid, but it does have a little bit of this. This is good. This is good. This is good, but extended. All right, with bullish divergence. So here's how I would play this. First of all, where do you think it's going? That's step one. So let's open this up. All right, so kind of a messy chart a little bit here. So not my favorite right off the bat. We've already overextended on the 60. Target zone, best chance to guess on this one, and it really is a guess, is probably something along this range here, and we're already in it. So maybe a little further lows, but not much. So no go on this one, okay? BXP. All right, but good, thank you. All right, silver. Let's take a look at silver. All right, so silver's come down quite a bit. All right, so we're gonna see if we got any type of possibility here. All right, so if this was a bottom, then I would expect silver to gain, but you know, we got a red PTF, so it's not a bottom yet. I'm gonna remove these here, okay? So this is still coming down. So I would wait on buying silver. Wait until the PTF is no longer red on the daily. You've got an active pyramid to the downside here. You've got bearish momentum, which is quite heavy there. You've just turned a bearish momentum here. You normally usually get about 4 histogram bars as a minimum when they turn like that. And this is bullish. So it looks to me like you're getting a little bit of an upswing here. Point of inflection for this. All right, take the recent high, recent low, go about 50% or draw your fibs in. So probably we'll get up to here and then take another dive down. And I say that with a little bit more probability or confidence because the PTF is red at this time. Do you see, if you don't have the right tools, it's very hard to determine with any type of confidence level what to do. So having the right tools is really important. So in this case here, don't buy yet. If you're thinking about buying silver, I think it's going to go back into the teens. Gold is another one we want to check on today. All right, so gold is also pulled back. The difference here, however, is that we have green PTFs on all time frames right now. So that's kind of indicating that, you know, when this pullback is over, we're going higher. That's what that is saying. So what do? Well, you don't go long yet because of this. All right, this has to turn green. So hang tight for a little bit. What could happen is we could go up here, pull back. If this bottom holds, then boom, you go. Okay. So let's make sure we look at this next week. If you're in gold, all right, chances are your stop has been far away based on the weekly chart. So maybe down in this area here. Then you just hang tight. I think you can get a better price if you're a little bit more careful on it, though. All right, Patricia, how are you? Let's see. Okay, NUE, both long. Okay. All right, not sure where you got long at, but you're definitely in a corrective scenario right now. All right, so, okay, so PTF turned from green to red on this, and now it's red also on the 60 minutes. So it looks like it's going to be pulling back a little bit more. We have, for a long position here, you have a very strong owl. So I don't think this is a trend killer here because you don't have, I don't think you have bearish divergence here either. This owl now is higher. So we're probably very close to an inflection point on this. So let me draw in the fib retracements. Since you're still long on this, and again, I don't know exactly where you got in, but you know, you're kind of in this area where it needs to turn around. So it exceeded the 70% high probability target zone. It's in the 15% area now. All right. So, you know, it's kind of, this is kind of a little dicey here because we also took out this point here, and anything that would have been a wave one possibly up there, okay, is a little bit in danger now. So, all right. So this may not be just a small pullback is what I'm saying on that. So I think you need to have a stop in place in case it erodes dramatically. So I don't know where you got in, but if you just got in, all right, I'd put your stop down here. All right, off this price bar at this point. Because we're going to go lower than this one. If you want to put it here, that's fine, but I don't know what your trade size is. I definitely would not initiate a long trade now. That's for sure. Okay. Hopefully that helped you. Okay. AOXY. But I don't think that's going to be a little bit of a tricky one. All right, OXY. Let's see what we got cooking on this one here. So OXY moving up, fairly stable in a market where we've seen a lot of volatility recently. So that's a benefit for that. So we have a stop on the long-term chart at this pyramid here. We just went from green to yellow. So now it's neutral, and it, you know, made its high. So it worked. So there you have that. You have bearish divergence building here. You've had 1, 2, 3, 4, 5 pyramids in a row. So you're getting near a pullback. When you have more than 4, you've got to take note that you may be getting into the mature part of a trend. And therefore, you have to watch out for the trend reversing. So I would not go long here. But if you are still long, I'd put my stop under this pyramid here. So if I was position trading, like probably most of you are doing, stop needs to go here. All right. If you're long-term trading and you're trying to stay with the trend, you can go here. You have a greed bar that formed up here. So you got to be a little careful here. But in any case here, I would say stop here would be good for 99% of the cases. Okay. I don't think it looks to me on the 60-minute chart, you're going to get one more high. Okay. So that's why I'm not saying bail out here, but this stop should hold. Because this 60-minute chart, if you have a bullish PTF, chances are you're not going to go down that much further. Okay. So that's how I would play that one. And hopefully that helped. All right. Okay. So you're waiting to go long on that. Okay, fine. On this one, don't go long now. Wait for the pullback. You missed it. All right. So you got to wait on this one. It will pull back. You might get one more high, but that's probably all you're going to get. All right. So, all right, I have to take a look at Bitcoin here, and I do that by looking at the ETF on that GBTC. So this one, we had hopes for this one when it rebounded off this bottom here, but now it's deteriorated, stopped out, boom, out of the trade. Could it come back? Sure. This is still green. We're going to watch this like a hawk, because if it dips below this lower band, it's going to abruptly turn red, and therefore all hope is off at that point for a long trade. So it needs to rebound pretty soon, but it's sitting here with a 60-minute red PTF as well and a bearish active pyramid here. So we may get a rebound, but if this stays red and doesn't turn green, then it's coming back down for another bottom. We do have bullish divergence, so that note. So I think we're close to some form of a bottom here, but we want to make sure before taking another trade that we have a change in momentum significant enough to warrant a long-term trade. Now, I know there's a lot of info out there floating around on Bitcoin and the future of Bitcoin, and that's fine. All right. But, it's confusing too, because there's so many varied opinions. So stick with the tools, stick with your technical analysis. And that's all we can do. And then when you take a trade, make sure you use risk control so that trade is of proper risk. It's kind of like the bet size. Make sure the bet size, you don't want to, put all your money in and lose your shirt. Instead, you want to take an appropriate trade size for the risk involved in the trade. All right. So this case, you should be out of a long position. I wouldn't even be in a short position. I would be neutral, and I'd be waiting for this thing to turn around. And if it doesn't, so be it. Okay. If it does, then we'll probably see it and we'll talk about it and take another trade at that time. All right. So I'm trying to see. I think I went through all of them today. Anything else? Let me know if I missed one. It's very possible I could miss one. Anything else cooking here? Okay, I think we're good. I'll give you just a minute. I think there's a little bit of a delay, so let's give everybody a minute just to see here. All right, I think that's it. So what do you think? Which ones do you like the best for this week? I have McDonald's, MCD, or ACM. And MCD would be a long-term short. I think maybe that might be one that I would probably consider one of the best trades, okay? Because I think it's got quite a ways to go. Yeah, I think that's probably it. So that's McDonald's, that's MCD. I'd put the target down here and make this a long-term trade. Short-term trades here, but you got to be careful of the risk to reward there. So you have the risk to reward on this chart here, but not on here. Okay, so I would make this a long-term trade. ACM, similar. Okay. Except, well, no, not really, because you don't have a red PTF on this one and you're pretty close to the target. So McDonald's is the winner, MCD only. Okay. MCD. All right. Well, we'll be back next week. I want to thank everybody for coming. All right. And we'll see you next week. Hope you all are doing well. And you guys have a great week, and we'll see you next time. I'll put this up. I'll leave this up for a little while on the MES, which is the micro E-mini futures contract, June 22nd contract. 1 minute time frame in the middle, 15-second on the left, and 5 minute time frame on the right. This is the layout we use for day trading. And as you can see, nice short trade here as well. Stopped out here for a nice profit if you had taken it. And we'll just let that run for a little bit, and then we'll see you next week.